Welcome to the Investment Process Channel. I am C3 Christopher Campbell. This channel where we teach people how to create generational wealth through trading. We're going to review TradingView's long and short position tools. I think this is a good tutorial. I did watch theirs. I want to create this tutorial to clean up the gaps that I saw in the tutorial so I can have more clarity, and maybe you guys can get more clarity too as well. So let's get into it. Okay, here we are on the TradingView platform. Pretty much set up. I'm going to use ES for our tool, and right over here to the left, you click on this here, you see your projection tools. You see long and short position. Long position, self-explanatory. If you're trying to take a long bullish position, you use this tool, and vice versa. If you're trying to take a bearish position, you use the short tool. I'm going to use a quick example. So boom, here. Set your stop loss and your take profit. Boom, set up, and the tool works for itself. We'll get into more details in a second of what the numbers mean, but this is pretty much how a tool is utilized. And you just look at your risk to reward for risk and a five reward. In this example, your risk is 4, almost 5. And your reward is almost 5. That's like pretty much like a 1-to-1. And vice versa, if you want to utilize the short tool, let's click on short position. Say I click on here. I stop loss above this one, my target here, and you see in this position, my gain is, again, my risk is 0.08. My reward is 4.46. My P&L is 59.25, right? So that's the opposite. So let's go ahead and look at the long position, and I'm gonna show you how to set it up and get more precise with all the tools inside of it. So utilizing the long position tool, let's go ahead and set our stop loss right here. And this looks pretty good. Okay. So utilizing this tool, I'm setting my stop loss below this candle here. I'm looking at for price to come back up to this area here. Price has been here before. Price has also been here before. So this is the risk level I'm willing to take as far as me looking at price action. So I'm gonna set my stop loss below here. So with that, we'll double click on the tool. It'll bring up all of the numbers and stuff. First of all, let's look at visibility. Again, you can look at you can have your ticks on, and this will show on whatever time frame you want it on. So of course, you know that lines. Dang it. So for lines, you can have it on, off. It's up to you. Go ahead and put a white label. You can make it, you know, small, large as possible, make it like super big, whatever the situation is. We're just gonna keep it white for right now. Stop color, you can make it like solid red, or you can have it so it can be see-through. I like it see-through so I can see the candles. Text, white. Good thing about this, you can it can take over your whole screen if you wanted to, or, you know, small or large as possible. We're gonna keep it at 12 for this video. Actually, I'm gonna put it up to 14 so you guys can see. Always show stats. So this is a key check right here. Unless you are actually clicked on the tool, these stats won't show. So if you always want to show them, you have to have that click. So I'm gonna click it for this tutorial so that they stay on during that. And now inputs, it's very important. So right here, account size, what this default over here is asking, what are your units? So I trade in US dollars. We're gonna say 100,000. And I'm doing this just specifically because of the tool I'm using. I'm using a S&P mini tool. So their lot sizes, you know, are quite large. So in order to show this properly, I need to use that. So right now, I always use a default lot size of 1, right? And I'm gonna show you why in 1 second. And the risk to my account, always 3%. Well, not always, but 3% is pretty much a good number for risk size of your account. So 3%, you know, some people have higher, some people have lower, but we're going to use 3% today. Entry price is wherever your line is. And if you want to get precise, you can go ahead, you know, type it in like where you want your entry price to actually be. Ticks, if you want to use ticks for your take profit, right now we're at 293. Let's say I wanted to go ahead and take a look at this candle right here before this equal high candle. And I'll take a look at the top of my screen and look at my my high, which is 61.23.25. And I go right down here, 61.23. I'm going to put in 2.5. Boom. Now I'm right there on that. If you want to be precise, you can be precise. You have that option here. Same thing with your stop loss. You can put a number in, you can drag, drop. It's up to you. Once you input all of these in, you'll see right here for this particular trade, once we put this in, our risk to reward ratio right now, my risk is 5.217. My reward ratio is 6.39. If I look at that, it's something like a 1-to-1 because I'm risking like, I'm at 5 here and this is 6, right? So what I want to do is I really want this risk number to be a 1. What I found in this tool, if I take this number, it doesn't matter if it's above or below. If I take this number and multiply it times my actual lot size, that will give me my risk level of 1. And that's what this number should be. Your risk should be 1. Now, if your risk, let me say this, it should be 1 or above. This here means I have 5 more units that I could purchase to make my 3%. So right now, I am only, if I take this and multiply 3% by 5, that'll be my risk. But I have 5 more units I can purchase, lot sizes, 1, 2, 3, 4, 5, to get that to a 1. That's what that lets me, and that would be 3% risk of my account. That would be at 3%. If, let me do 6. If I go to 6, that number is below 1, I am above my risk level. This number should be a 1 or greater than 1. If it's below 1, then you're above your risk for your account. So, and with this, it's simple math. Let's say, let me put in 10. I'm like, oh, I want a lot size of 10. Oh, well, once I set my trade up, it's telling me, hey, my quantity for my risk is 0.5. So I say I want a lot size of 10. I need to take this number, 0.5, and multiply it times 10. 0.5 is half, right? So go ahead and put 5 in, and now we're back to a 1. Going back to what I said, we want that risk level to be 1. So right now, if I look at this, my risk to reward is for one unit of risk, I'm getting 6 units back of reward. And that's how you look at that. My stop level, 11.5. It's about 19% change. 46. It's moved 46 units. Amount is 97,000. That's here, right? It's moved $97,000 US, because we have our units here in US dollars, and vice versa, right? Here's our profit. This is the ticks. These are the units. So if I take this number here and subtract it from this unit, this entry here and subtract it from there, that's how many units is moved. This is how many ticks is moved, and this is the amount. And again, back here, down here for my risk level, this is how many units is moved, and that's the percentage of the change in price. This is how many ticks is moved, and this is the amount. So $97,000 is moved, and then the profit is the same. So I want to foot stomp and I'm gonna go over risk to reward real quick. I'm gonna show you a PowerPoint slide real quick. Okay, here's the risk to reward ratio. So pretty much, if you don't know what risk to reward is, for every 1 unit of risk that you have, so let's say I'm risking $1, I want to get $3 in reward, right? So when I say we're using a percentage of our account, that 1 unit is whatever that 1% is. So if you're risking 3% of your account, that 1 is 3%. This reward is 3 times that amount. So in the case of you're risking 3% of your account, if your reward is 3, it's 3 times that 3%, which is about 9%, and that's of your overall account. So your actual return is 9%. But let's focus on, if you set up your risk level in that tool to 3%, that's 1 unit of risk. And your reward is 3 times that 1 unit of risk. That's the risk to reward ratio, and that's what you should focus on. And I know in the tool it has it flipped. They have risk first and then reward. But typically when people are saying that they're getting a 3-to-1, a 5-to-1, or a 10-to-1, they're talking about the reward to risk. So the risk is 1, and the reward is the other number, which is 3, 4, 5, or whatever. And there's some people who are fine with getting a 1-to-1 risk to reward ratio. But it's simply put, for every 1 unit you risk, you want to get a return of 3, 2, 1, whatever that level is. All right, let's get back to the tool. So going back to that, again, if your risk percentage is 1, that's what this risk is showing you. It's showing you a quantity of 1 of your overall percentage of risk. So again, if I break this down to 2.99, get 2%. So now you see my risk level went down to 0.69, or let's say 0.7. So I would take this 0.7 and I would multiply it by this lot size, and 7 times 5 is like 3.5. Let's say I'm just going to do 3. Now I'm back down to a 1. So again, you want this to be a 1 or higher, so you're below your risk threshold. So anytime you get a number below that 1, you want to multiply that times your lot size, and you'll get your lot size. Now, I will say this. Let's say we're at a 1. Let me take some zeros off of this. I'm at a 1, and my risk is 0.03, and I can't go any lower because, again, this is mini. This is not a good trade for me. If you're ever in a situation where this risk number, once you put your risk ratio, your risk to your account in here, and this number is below 1, and you can't get any lower, 1 or 2 things has to happen. Either this is not a good trade for you on this time frame, or you can go to another time frame where your risk, your stop loss will be tighter. Now, that's up to you. But typically, if your your risk ratio is below 1, it's not a good trade. That's all I have. This is the Investment Process channel. I hope this tutorial helps you gain clarity. It helped me a lot. So I hope this helps you out. Happy trading.